But the bond market is usually right. And the bond market sees that inflation is going to come back, and that's why the bond prices, long-term bond 10 years, are falling, and why the interest rates on 10-year bonds is rising. So I think inflation will come back. And that also, as I said, explains to some extent why people are starting to move into inflation hedges, which include, of course, the precious metals. So my point here is that one of the reasons we're seeing this rally in the gold price over the last year is it started to play catch up. People are starting to get an unease that this level of government debt is now out of control, and they want to hold something more tangible, something more long lasting, because we are edging slowly and surely towards some sort of reset. I don't know what form it will take, but in a reset, as a general rule, those who hold the cash or the bonds don't get paid, or don't get paid in full. Whereas if you own an ounce of gold or a house or some shares in a large company, they'll still be there. And I think people are moving, those who are in the know are starting to move some of their assets into these tangible assets. And I think gold is the one thing which is the real proof of this, because gold is not affected by the fortunes of the economy. It's not like an IBM or Microsoft or Nvidia, where the profits might go up and down and change the share price. You can justify the change in share price on the grounds of how well the company's doing. In the case of gold, it has no earnings, it has no dividend, it is just a lump of metal. The desire to own that lump of metal is rising rapidly, so much so that gold is one of the best performing assets, probably the best performing asset this year.